Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap. And it's actually the end of the month recap because today is the 31st. So May is now in the trading books, and we're on to a new month. So make sure I'll talk about this briefly, and then we'll move on to today's price action. But and by the way, risk disclaimer is in front of you. Make sure that you read the whole risk disclaimer. Everything that we're talking about is for information purposes only. But yes, end of month, it's a big step in the trading process to make sure that you go through and you review your results. You don't. I talked a little bit about this in yesterday's video. Talking about taking what the market is giving you, right? Not arguing right with the market, as we see so many people on Twitter do. Your results are your responsibility. The market's not wrong. It's not somebody else's fault, right? Everything that we do, we is our responsibility for. So it's important to kind of go through and to look and say, okay, how did you achieve your results? What was your ratio of winners to losers? And also very important is, did you let your winners run? You do need, there's, in my opinion, and I say this a lot in the trading room, but there's 4 types of trades that you can have. I guess really 5, but it's really 4. You can either, and this is just the outcome of any trade, it's either going to be a small winner, it's either going to be a big winner, or it's either going to be a small loser, or a big loser. I guess number 5 would be a scratch, right? If you're basically flat on a trade. But the object is to not have any of the big losers. You're going to have small losers. I've said it before. I said it really for the year, more frequently for the year 2022. I said your year is going to be defined based on how you managed your losers, and I think that's still definitely the case this year as well, but probably even more because there was higher volatility. So how you manage your losers, and again, I know on Twitter nobody has any losers. I get it, because that's what type of a platform it is. But in real life, yes, I have losers sometimes. Every day. It's how you manage them, and how you capitalize on your winning trades, right? And sometimes in my videos, I talk a lot about the losers first, because I think it's just so important, how you're dealing with them, because not every trade is going to work, right? And another thing that I try to make sure that traders understand is that there's no risk, there's no way of getting out of you're not taking risk. Whenever you click the mouse, you're on the hook, right? You're in a trade, you're taking risk, right? It's what you do at that point. Of course, I hope that you have a plan going into the trade, but it's really up to your execution. So bottom line is just going through and reviewing. I managed to come back quite nicely. I did not have a good April. I made some mental mistakes. That happens, right? We're also susceptible, right, to being frustrated or making, forcing, making mistakes, forcing trades. So that's all part of the investor psychology and the competition within yourself. But I had a great month, in terms of coming back from that. So I'll report my results probably tomorrow morning. I don't know or if not, I'll do it later this evening, but most likely I do it the day after. So good to get back on track for the month, and a decent amount of trading opportunities too, right? A little bit different than a couple months that we've had this year. So one of the things that we're going to do new at Tribeca Trade Group is we're going to have an open forum. We've been having some discussions with some traders in the trading room about improving, getting better, right? It doesn't matter what level of the trader you are, you still need to get better and improve your process, right? I've been doing this for a long time, but I still am looking to improve and get better in what I'm doing. So we're going to have kind of an open dialogue. We'll have like open mic night. And that will not be karaoke. That will be strictly for talking about, what they experienced in May, and some of the things that traders want to improve on. So we'll probably do that in a couple days. So look out for the calendar and invite if you're a member of Tribeca Trade Group, right? But those are things that again we try to do, right, and we try to bring, add some value, because it's not just, oh geez, I put out, another thing that we see on Twitter all the time is, folks putting out these pretty charts, right? With an arrow up or down. Oh, and it's such a clean looking chart. Well, that's nice. I mean, it's nice that you could put together a really nice chart, but that's not trading, right? Nice, pretty, I see them all over the place now, like the white backing charts, right? Oh, geez, look at how pretty my chart is and how nice it looks and how centered it is on Twitter, right? But that's not trading. That's making happy little pictures, and so forth. So anyway, I'll get back on back on target. So it's so much harder than putting out a pretty chart with no indicators on it. But in any event, let's move. Let's keep going here. So a couple things, as we get to the end of the month, I'm not going to do a whole review on performance, but I think some of the things just kind of stood out to me for this month. Of course, we know how well Qs did for the month. They were up close to 8% for the month, and unless you took off for the month, then how well the Qs have been performing, and how much they've outperformed. In fact, if you look at the SPY for month to date, really didn't return much of anything. It was barely positive for the month. IWM, just unbelievable, is down on the year. Down, negative for the year, and Qs are up 30%. I mean, there's a 30% difference between the Qs and what the small caps are doing. That's a very unusual distance between those two performers, and SPY's up 9% for the year. So I mean, that's not bad. I mean, that's pretty good. It's just so unusual to see something like this. We're not even halfway through the year, and you've got Qs up 30%. I mean, that is normally a very good year. Again, it's one of those things to kind of like shake your head at a little bit, because the amount of predictions that, remember, going into this year, we heard everybody talk about that we're probably going to have bad performance in the first half, but in the second half of the year it might be better, right? That's why we don't make predictions. It's really, in my opinion, kind of stupid to be making those predictions, because no one has a crystal ball, right? Every year there's going to be somebody right and there's going to be somebody wrong, depending on how they kind of do it. But sometimes it's just luck. It's not really skill. And so I don't think that there were very many people thinking that the Qs were going to be up 30% year to date. A couple other things that stood out to me, just for the month, right? ARK was up 12.7%, but look at the IBD 50. And I'm not trying to say anything bad about the IBD service or anything like that, but I think it just illustrates how difficult it is to be a stock picker, because that's an actively managed ETF, right? And I see people all the time talk about, oh, this is number 5 on the IBD list. Well, I don't think that matters too much, considering that their IBD 50 ETF, it's trailing the S&P. It is positive for the year, but it's only up 6.2% for the year. Again, I'm not trying to say anything bad, but I would just say, be cognizant of what active managed, how difficult it is in this environment. And then, of course, here's another big disparity. Growth is up 24.4% and value is down 4% year to date, right? And that trend, this wide dispersion, I guess you could call it, carried on to the month, because growth was up 5% and value was down 4%. That also, same thing for small caps, but certainly not as big of a difference there. Small cap growth was just squeaked out a gain for the month, but small cap value was down 1.8%. So again, those are some interesting numbers. We could talk a little bit about the day's performance, but I really think, and you could see Salesforce, so we could talk about some of these after hours movers, but I really think that we're due for a little bit of a rest. And it doesn't mean that that's what we're going to get, But if you look at the S&P, and the 1 hour charts are really telling for me, because I am sometimes a short-term trader. Most of what I do is swing trading, but I do day trade as well. And I think, what we would want to see for further upside momentum to continue this week is for a move back above 42.03 in S&P futures. Notice that we're inside the value area for the week, right? We've kind of broken in here. And we've basically are almost back to where we were for in the beginning of last week, right? And don't forget, I was going over this in the pre-market session. As nice as last week was, it kind of helped that there was a little bit of volatility and a little bit of a dip, right, last week. It provided some incentive, right, for market participants to say, hey, they've got an opportunity with a little bit of a sell-off, right? So that's what happened last week, and this week we're back inside that value area. Now, of course, I'm just going to back out here to the daily chart, but there's really not much to kind of focus on. We are going to get new value areas for the month of June. We may be opening up right at the top of value for the month, right? Again, these value areas, like the one that's highlighted right now, was based on all of April's volume and price activity, right? So the new value area for June will be based on all of May's activity. So this will be lit up once we get till tomorrow, right? Qs, of course, I've highlighted a couple times in these videos, is that we've got pretty overbought. We got to about a 77 RSI, right? So we're burning off some of those overbought levels, right? We're still right now at a 72 RSI, right? So we're still kind of cooked, in terms of overbought levels. Now, again, it doesn't mean that that's a horrible thing, that the RSI got up to that. It just means that, there's a lot of buying pressure. But normally that comes out of the market. Normally, the indices don't stay above 70 RSI. That's really rare. So you could see, I mean, we did some fight back here at the end of the day, but I wouldn't be surprised if we come in lower here. Also, I sent out on Twitter our pre-market sessions just so you could understand what I was saying. But I was kind of saying, coming into today, be cautious, and be okay with the market coming in a little bit, right? The last thing, in my opinion, that you want to be and again, I'm not giving out any advice or anything like this, but after a huge move, the best thing, in my opinion, to do is to be taking profits and to be slim, right? In terms of portfolio. And that's what I went over in yesterday's end of day video. I actually showed my positions and what I was left with holding, and it wasn't much, right? And of course, I'm watching my watch list, and I've got some names for us to kind of go over in this video. But to me, unless we really kind of get back above these short-term moving averages, maybe we begin to kind of retreat a little bit down in here. And again, that's not a horrible thing. And maybe see a rotation out of some areas, right? We don't have to see a rotation, but I think you want to be kind of, aware that you might see that, right? So if the question is, like, if that's the case, where could things be rotated into? One of the things that I think is interesting, and what I'm watching, is biotech. That could, this was an area that saw a lot of M&A activity, a couple of weeks back, but it's kind of dried up a little bit, right? And we've seen this kind of digestion. It's a tougher chart, this XBI biotech, right? It did not close on the highs, unfortunately. Kind of sold off at the end of the day. There was all types of like end of month positioning that was going on, but I would be watching this 84.23 level, right? That's the 1 hour bottom of value, and if we can close in there, I started to see, various different smaller cap biotech names acting pretty decently. Some larger healthcare names too. Remember, the whole healthcare space has gotten pretty beaten up, but look at the move that healthcare made today. Up 1%, and there's some good names in here. So I traded some CAH, right? Cardinal Health. I mean, this is definitely a lower volatility healthcare name, but it had good earnings, right? And it came in and basically erased that earnings move and checking back to the breakout area. Like, I think that's a good place. And it's, again, I think it's a lower volatile name. Eli Lilly too, got a little bit too ahead of itself, but you could tell it's holding the 20-day moving average in here, right? So this is not a bad setup. If you're looking for a slight dip, I say slight because it's it's only down about $30, from where it was, about a week and a half ago. But sometimes the strong names won't give you that big of a dip, right? And it's holding the 20-day moving average. So this is a name that I'm definitely watching. A few other areas of the market that, again, these are still growth names. I'm going to go over a couple names. I'm watching Celsius, right? Celsius had this big move up, went all the way up to 138. Stock's down to 125, right? Let's see if it can retake the 5-day moving average. Right, if you're looking for a level on the 1-hour chart too, really this will be a little bit late at this point because it's decently below, but I would watch 128.30. Right, another one too, I think that's interesting is this global online. Right, this had a nice move today, nice bounce on the 20-day moving average. Again, another name that had a decent run up into the earnings, and the earnings I believe were pretty decent in that one too. Shack is another one too I'm watching. Shake Shack, right? It got a little bit ahead of itself. Really strong move after earnings, popped all the way up to $71, right? Sitting down about $5 and holding the 20-day moving average. And again, that might take some time in there. Elf is another name too, very, very strong. Maybe it consolidates a little bit more. Tesla. Now, again, there was some end of day stuff going on with Tesla, end of month, but really we're getting very close to this 205 level. This 205 level, in my opinion, is very significant, right? That's the bottom of the 2023 value area, and it's had trouble there this year, right? It's tried a couple times. There was 1, 2, 3, 4 weekly candles here, and then another one in here, and that was the last time it saw this bottom of value. But it's testing and trying again. So I am long this name, and it had a real nice move at the end of the day. But I think that had to do with end of month rebalancing. But there's the move, right? Because if you look, right, there was names like this that went, Apple did the opposite thing, right? So again, it's usually after month end, it kind of straightens itself out. All right, so that's a couple names. And then, of course, some of the names that reported after hours. Salesforce is down a bit, but keep in mind, right? Always be realistic, right? With some of these names that are reporting earnings, right? Look at the difference between Salesforce the last time, right? It reported, it kind of hung out here and digested, right? Now it did make a nice run from the lows, of course, but it was off the highs. And then it made this really nice move. So, be patient with these names. And, I was talking to Benzinga yesterday, after hours, not after hours, at the end of the day yesterday. And I said, hey, it could make this move to 237, but it may not get there in a straight line. And if it checks back into around this 200 level, right, I think that would be a good buying opportunity. Now it's at 215. 212 is the top of value, but let this straighten themselves out. I don't know what they're going to say on their conference call about AI, but I would imagine they will do that. A couple other names are down decently. CrowdStrike, right? Again, it seems to it's just bad news sometimes when a name runs into its earnings report. Right. So here's the names that are down. Okta's down 13%, and I thought that their numbers were fine too. It's just the fact that many of these names, they ran into their quarter. So, we talk about expectations all the time for earnings. If the expectations are low, which we kind of saw that for going into earnings season, that the expectations were a little bit too low. But as we've kind of progressed through earnings season, those expectations, have now been adjusted to not low expectations anymore, but pretty high expectations, and I think you're seeing that reaction after hours. Moves up. Chewy, nice move. Viva Systems looks like they boosted their guidance. Pure Storage is up too. And a few other names. So I'll leave it there, guys. Again, congratulations. If you traded, if you made it all the way through this part of the year, there's plenty more to go. And, hopefully you're accumulating profits as you go along. We'll talk more about that and the members an end of month video, which I send out to members every month, as well as the webinar that I talked about earlier. Have a great night, everybody. See you tomorrow.